name of the topic is Framework of AS. Today's date is 23/3/18. This can be asked for 4 to 6 marks, both relevant in audit as well as in FR. Alright, so let's see. It is a very easy topic. Just spend 5 to 10 minutes. You'll be done with this topic. We will discuss practice manual as well. Let's see. Framework of accounting standard may be asked for 4 to 6 marks. Alright. Application of Ind AS, Indian Accounting Standards. Timeline. I have written timeline in this side and all the relevant provision this side. This is 100% complete notes. You don't have to refer any kind of book. If you are doing last minute or last month study, this much is 100% sufficient for you. Let's see. For 1.4.15, voluntary application of Ind AS. Rule 4. Rest of this thing, you may learn it. It depends on you. From 1.4.16, company, holding, subsidiary, associate and joint venture. Whether it is listed, whether it is not listed. Both the cases. If net worth of that company or its holding, its subsidiary, its associate, its joint venture is more than or equal to 500 crores, it will start applying Ind AS from 1.4.16. This net worth criteria will be checked on 31st/3/16. I have written this. Status of net worth to be checked on 31st/3/16. Next. From 1.4.17, one exception is added: BIN, banking, NBFCs and insurance companies. Banking, insurance and NBFCs, these are kept in exemption. These will be Ind AS will be applicable on these after 1.4.18. We'll discuss it later, just in 1 minute. 1.4.17, company holding is HSAG. Exception is BIN, same as here. Any listed company now compulsorily it will be applicable on all the listed companies from 31st/3/17, whether its net worth is more than 500 crore, less than 250 crore, whatever the criteria is. For unlisted companies, net worth should be 250 or more. Means for unlisted, less than 250 crore, not applicable. And for private companies, alright, whose net worth is less than 250 crores. Alright, rule 4.1.3. Alright, next point. From 1.4.18, these BIN, banking, insurance and NBFCs will now be covered. Banking, insurance companies except NBFCs. NBFCs will be discussed 1 year later. Compulsorily from 1.4.18, banking and insurance, Ind AS will be applicable. But for NBFCs, if net worth exceeds 500 crore, then these will be applicable from 1.4.18. Alright. The last provision in this, NBFCs, if listed, compulsorily apply. If unlisted, then NBFCs if net worth exceeds 250 crores. If net worth does not exceed 250 crore, then Ind AS will not be applicable from 1.4.19 as well. This completes our list of application of Ind AS in the progressive manner. Alright. Now how net worth will be computed? I have written a small quick formula which is 100% accurate. If you memorize this formula, you'll be able to attend the question. Paid up share capital plus reserves minus losses. Alright, what will be added in reserves or included or not included in reserves? Exception. Revaluation reserve and capital reserve will not be included, but capital reserve will be included if it is due to government grant or from promoters contribution. This completes our list of application of Ind AS. Now we'll move on to the next topic. Now we have certainly two kinds of accounting standard, one which are given by ICAI and one which are given by MCA. All right, so I'll just discuss all those. Accounting standards are of two types: notified by MCA, notified by ICAI. All right. As notified by MCA, Companies Rule 2006 introduced on 7/12/16. Irrelevant. Notified by MCA, there are two types of companies. One is badi company, one is choti company. Badi company and choti company. Badi companies are, what are badi companies? This. What are choti companies? Which are not badi companies. Badi companies non-SMC, small and medium scale companies, and small and medium scale enterprises or companies. All right. All accounting standards will be applicable without any exemption, and exemptions will be granted. Full exemptions or partial exemptions will be granted. You'll have to learn these few things by heart because this is very important. Question will be asked on this or from the criteria of how whether it is non-SMC or SMC. Now, definition of non-SMC. We have seen the definition of SMC, which is not non-SMC. Now, what is SMC? Other than non-SMC. SMC means other than non-SMC. Now, what is non-SMC? Any company which qualifies any of the following condition is considered non-SMC. How many conditions? Only 5 conditions. Number 1, listed company or in the process of listing. All right. Second, banking, insurance, financial institution. This is number 2. BIF, or you can say IIFB. I'll tell you the mnemonic code how to learn this. I have written it over here, mnemonic for non-SMC, how you can learn it. Turnover in previous year exceeds 50 crore in previous year. Borrowing anytime in previous year exceeds 10 crores. Holding subsidiary of any of the above, means all these 4. This completes what is the definition of non-SMC. Now let's see the mnemonic code. Mnemonic code is इंडियन फैशन बैंक ने 5 बार लिस्टिंग करवाई. I'll tell you why I used 5 and listing करवाई. Now, Indian for insurance, fashion for financial institution, bank for banking companies. All right. ने 5 बार listing करवाई. Listing or in the process of listing. All right. Now, B for bank and B for borrowing as well. Borrowing means 10 crores. 5 बार listing करवाई means turnover, for turnover purpose it will be multiplied by 5, 50 crores. So this is a small mnemonic. You can frame any of your mnemonics. Just check the notes. It is very easy to learn. This is just a mnemonic, so you do not forget it easily in the examination. Okay. Now what are exemptions? Full exemption for AS 3 and 17. For SMC, partial exemption 15, 19, 20, 28, 29. Okay. 5 years partial exemption 15, 19, 20, 28, 29. This is partial. Full exemption is 317. Alright, this completes our framework in related to MCA. Alright, now I told you there are 2 types of AS, MC and ICAIS. ICAIS, which are non-companies, these are for companies. There is one more thing which you should learn, that is conversion rules. If any SMC becomes, means small company becomes non-SMC, means upwards. छोटी से बड़ा बनना. Previous year figures are not required to be reported by non-SMC in relation to which exemptions were claimed. Perfect. That makes perfect sense. Alright. Which were AS covered in SMC? Let's quickly revise. Full exemption 3 and 17, partial 15, 19, 20, 29, 28, 29. Alright. For non-SMC, exemption and relaxation to SMC will not be allowed for a period of 2 years. Exemption will be available from third year onwards. If any SMC, नॉन SMC, बड़ी कंपनी से छोटी कंपनी बनना, तो 2 साल तक सारी के सारे AS फॉलो करने पड़ेंगे. 2 साल तक कोई रिलैक्सेशन नहीं है. तीसरे साल से रिलैक्सेशन मिलनी स्टार्ट हो जाएगी. दिस कंप्लीट्स आवर लिस्ट ऑफ MCA AS which were given by rules 2006 company AS rules. Now we'll see accounting standard given by ICAI. ICAI standards part number 3. After completing this you will be done with framework of AS. 4 marks completely secured. Then we'll discuss practice manual question. AS issued by ICAI are to be applied to financial statement of non-companies by members performing a test function. AS are from 1 to 32 where accounting standard 8 and 10, sorry 8 and 6th, I'm really sorry, where 8 and 6th is withdrawn, and AS 30, 31, 32 are recommendatory or encouraged to apply, you can say. So in nutshell, this will be 5, the list of 32 minus 5 net accounting standard that we will be studying in our upcoming videos. Now, general exemption. Organizations which are 100% charitable or religious do not require to comply with AS. Very important. All other entities are required to comply AS, and entities are divided into 3 parts. How many parts? 3 parts. Level 1, level 2, level 3. Let's see how the categorization is done. It is 100% same as that of non-SMC. These are small and medium scale enterprises. Those were companies. These were small and medium scale enterprises. Level 2. Let's see level 1. Those 5 conditions: listing or in the process of listing. Alright, IFP, insurance company, banking, financial institution, turnover 50 crore, then borrowing more than 10 crores. It is more than. If it is equal to, then level 1 entity will not be achieved. Very, very, very important. It is more than 50 crore, not equal to. Alright, holding or subsidiary of above. Absolutely same as non-SMC. Then level 2. There is just a little tricky part over here. Only there are 2 conditions which are changed, and listing is omitted, and IFB is also omitted. Turnover is more than 1 crore but up to 50 crore. Alright, more than will be covered over here, and up to 50 crore will be covered over here. Borrowing more than 1 crore but equal to or less than 10 crores. Level 2. Level 3, which are not level 1 or level 3, means turnover less than 1 crore, borrowing less than 1 crore. Pretty much simple and easy. Okay, IFB were covered over here, IFB not covered over here, IFB not covered over here. I'll write it for you so that you don't get confused. Alright, now we will see exemptions. Full exemption. For level 1 entities, no exemption. For level 2 entities, absolutely same as non-SMC. Sorry, SMC. AS3, 17, 15, 19, 20, 28, 29. Only 2 more accounting standards are added over here in full exemption. That is 18, and 24. Alright, this completes our list, and conversion rules are 100% same as of SMC and non-SMC. If upward, that is from level 3, level 2 or level 1, 3 to 2, 2 to 1. Previous year figures are not required to be reported in respect of which AS exemption was claimed. Same as SMC. If downward, exemption not available for 2 years, same. Available from 3rd year onwards. This completes our accounting standard. Now we will see question answers which are in practice manual. So let me just take out the question for you. This question can be asked. So if you are spending 2 minutes, maybe your 2 minutes will secure you 4 marks or 5 marks. So these questions are in the beginning itself. Alright. So here we have the questions. Question number 3, practice manual, which is relevant for May 18. Alright. XYZ Limited with a turnover of 35 lakhs and borrowing of 10 lakhs during any time in the previous year. Turnover is 35 lakh, borrowing is 10 lakh during any time in the previous financial year. Wants to avail exemption available in adoption of accounting standard applicable to companies. For the year 31st/3/2017, advise the management on exemption that are available as per company's AS rule 2016. This question can be asked in your exam, and see the length of the answer. It starts from over here and then comes to next page all the way down till here. And what do you think, this kind of question, how many marks it will carry? At least 6 marks. So pay attention. So turnover was 35 lakh, borrowing is 10 lakh. Alright. And it is a company. Company is divided into 2 parts, SMC and non-SMC. First we'll explain what is non-SMC, and other than non-SMC will be automatically be SMC. Alright, let's see. Let us frame our answer first, then we'll see their answer. Means definition of, we'll give definition of. Okay, let's see. First we'll define non-SMC and SMC, and then detail about exemption of AS that are available to SMC. What were the exemptions? Full and partial. Full exemption from 3 and 17, and this was 19, 20, 28, 29, and there was one more accounting standard which was over here. Let's just see. Accounting standard 15, employee benefits. Alright, point number 1. Point number 2, now we will list down the conclusion part. Alright, this is relevant law, and this will be the given case and conclusion. Let's see the ICAI answer now. The question deals with issue of applicability of accounting standard for corporate and non-corporate, classified into 2 categories, SMC, non-SMC. As per companies AS rules 2016, criteria for above SMC are means small, which means the company whose equity are not listed. Means we are defining SMC. We can choose to write definition of non-SMC, because I have written this question in a different format. So not listed or not in the process of listing. Okay, which is not a banking, which is not an IFB, insurance, financial institution and banking. Borrowing means borrowing does not exceeds 10 crores. Borrowing from financial institution, debt, etc., from everywhere. And turnover 50 crores. This was turnover, and here we have the borrowing, and then not a holding subsidiary of above. Alright, turnover 35 lakhs, not exceed 50, and which is less than 10, and borrowing is also 10 lakh, which is less than 10. So it is a SMC. means SMC. One thing is clear now, by law we have defined that this entity XYZ Limited is an SMC. We'll write down the full exemption and partial exemption. Full 317, 19, 20, 28, 29, 15. That's all. Accounting standard 21, 23, 27 are not applicable to SME. It is an automatic accounting standard because it does not have any subsidiary or holding, so automatically 21, 23 and 27 are not applicable. Alright. However, if XYZ is a partnership firm, not a corporate, then classification will be done on the basis of non-corporate entity prescribed by ICAI, that is with level 1, level 2, level 3. Since turnover is less than 1 crore, 10 lakh, borrowing is 10 lakh which is less than 1 crore, it will be classified in level 3. Exemption will be available for 2 more full accounting standard. And what were they? They were simply, let me show you, 18 and 24. 18 will be added, 21, 23, 24, 27, and one more will be added, 24. Yeah, 24. So this completes one of our question which was important. That's it guys. Thank you for watching, and if you like this video, please like it. It will encourage me to make more videos for you, and surely I'll make more proper videos for relevant parts. Please share it, subscribe and like. Thank you so much. See you, all the best.